After the bulls were let out upon our entry into 2024, investors are definitely taking a bit of a breather here, and rather recently we've actually seen a record year high followed by now a sell-off. Of course, we're also just in the midst of earnings season, which always gives way to some higher volume trading and then by default volatility. As we now know, volatility gives way to opportunity, so that is exactly what I have for you today. Opportunities, 3 dividend stocks that are ripe for picking for you literally to buy now and just enjoy for the longer haul. With that, let's go ahead and dive right in. Now, I won't go too deep into all these macro insights in this video. I'll save that for Sunday's video, but I do want you to know that we could certainly see some more market downside coming our way in certain sectors. And depending on the Federal Reserve's chess move when it comes to fighting inflation, the market uncertainty really won't be over until Jerome Powell sings. But timing the market, as we all know, never really works. So dollar cost averaging then into high quality companies for the long term is exactly what we should be doing, and I encourage that for the masses of investors. Heck, the best strategy actually in terms of true reliability deals in ETFs, but every now and then we can invest into some dividend stocks that look ripe for an investment. So I'm going to go ahead and talk about 3 dividend stocks now. PepsiCo up first, ticker symbol PEP, which is one of the most dominant soft drink manufacturers, right up there with none other than Coca-Cola. But also it's often not as understood that this is a player in the salty snack game, whereas more than half of its revenue actually pours in from snacks, and that grants Pepsi diversification. Now, Pepsi year to date is trading for roughly $167, which is down by less than 2% on the year. While that doesn't seem like much, if we zoom out, we can actually go back to July here and see it was trading for $191 per share. Now, get this, full scope, let's zoom out once more, 10 years time here, we can discover that it's had one heck of a growth track record, with Pepsi delivering through on over 184% worth of share price appreciation. But now, investors, that's all the past. Let's go ahead and look into the future with the analysts here. They're forecasting a share price climbing by 11%, coming up to $185.83 per share, on top of hedge funds who have recently been making a massive statement by purchasing over 3.7 million shares worth of Pepsi last quarter. Now, Pepsi is never really going to be on a steep discount, at least in my opinion, but it remains worth that value with this 3.01% dividend yield, a safety score on Simply Safe Dividends of a 93, while boasting a nearly 60-year track record worth of dividends and growing that dividend on average by 11% per year over the last 20 years. Next up, a dividend stock that I keep mentioning, especially as it's every dividend investor's favorite monthly payer. We have Realty Income, ticker symbol O, which is the largest net lease solutions REIT, which has amassed well over 13,000 properties and more recently just scooped up Spirit Realty Capital Properties in an acquisition. However, this all means that the company's actual footprint is growing, and that's making for concerns that even though it's a moat-worthy company, shareholders are now thinking about whether or not the size of this company could impact whether or not they can handle defaults. Right now, Realty Income slid from nearly $60 per share back down to $54 per share, making for a 4.2% decline on the year. But as interest rates do come down, which I do believe they will in due time, I suspect the company will be back in action and continue to deliver through on returns, appreciating by over 123% over the last decade, with plenty of analysts who remain calm and optimistic about Realty Income, with a forecasted share price coming in at $62.35 per share. That's about 13% worth of upside. Now, we also have activity from hedge funds here since last quarter. They scored more than 248,000 shares. But what keeps me excited about Realty Income as a dividend investor is that monthly dividend. And now we're looking at a yield coming in at 5.6%, which has been paid out for over 54 years. That's about a 5% growth rate over the last 20 years, year over year. Now, investors, just before I cover this next dividend stock, one that I personally actually just bought a handful more shares of last week as it slid, I want you to take massive action this year by subscribing to the channel and joining me on this financial freedom journey so we can actually go ahead and smash our financial goals together. Now, on top of that, let me know that this is the content that you're looking for by tapping on that thumbs up button. And in doing so, you'll just let me know to keep creating content just like this. With that, we're going to go ahead and take a look at Lockheed Martin. That's ticker symbol LMT, which is by and large the most dominant defense contractor in the United States and, of course, in the world as we're taking a look at all of its peers. Now, just days ago, it fell from around $460 per share to just under $430 per share. That's down by over 5% year to date, and quite an interesting chart to review here as the stock fell back in October, shot right back up as Middle East mayhem began, and we have Uncle Sam that is just steadfast on ensuring the biggest, baddest military in the world while remaining Lockheed's largest client. So I have this to say when it comes to Lockheed. It is definitely one of interest. After all, we have over 282% worth of appreciation over the last decade. We got a check there. And while the Lockheed team received a ton of recent downgrades from analysts for missing on their sales, this past quarter overall forecasts project a share price at $478.44. That's about 11% worth of upside to come. But now let's jump over to Simply Safe Dividends to see a very safe dividend yield coming in at 2.93%, which has been steadily growing for the last 31 years, where it averages about 16% worth of growth over the last 20 years. So talk about explosive growth there with a nice opportunity coming in from Lockheed Martin for the long-term investors who are out there, but you also have those opportunities with Pepsi and Realty Income. Now I want to know your thoughts on all three of these stocks, which ones you may be focusing on, or if you have a better stock in mind, go ahead and comment down below. More insights can be found right here in this video. Of course, be subscribed so you ensure you never miss another dividend stock idea.